Let me start with a number that puts everything in perspective. India's Aadhaar digital identity system enrolled over 1 billion people in under a decade. It became the foundation for digital payments, government services, financial inclusion and healthcare delivery at a scale no other country has ever achieved. It did not happen because India had better technology. It happened because India made a foundational policy decision to build shared digital infrastructure that every service in the economy could plug into. That decision is what digital public infrastructure is. And Africa is now at the same crossroads India was 15 years ago. The question is whether African governments will learn from that experience or keep rebuilding the same foundations in isolation, one ministry at a time. The most common misunderstanding I encounter when DPI comes up in ministerial briefings and policy forums is this: we already have e-government. Isn't that the same thing? It is not, and the distinction matters enormously. E-government means digitizing what government does. DPI means building the shared infrastructure on which everything, government, private sector, civil society, can operate. Think of e-government as a building. DPI is the electricity grid, the water system, and the road network that makes that building and every other building possible. A new report from research and policy organization DigitA confirmed in 2026 that this is Africa's defining moment in its digital journey. The continent is not deciding whether to digitize. That shift is already underway. The real question is whether Africa will continue consuming global technologies or begin building its own systems that reflect its priorities, economies, and people. DPI is the answer to that question. So what exactly is DPI and what does it look like when it works? Let me break it down into 3 layers that every policymaker needs to understand. Key point. 1. What DPI actually is. 3 foundational layers. Digital public infrastructure operates across 3 foundational layers, and you need all 3 for the system to work. Layer 1 is digital identity, a trusted, interoperable system that can verify who someone is, once and across every service in the economy. Not a government ID card, not a biometric database, a live programmable identity layer that a bank, a hospital, a tax authority and a mobile money platform can all use with the individual's consent. Layer 2 is digital payments. Instant, low-cost, interoperable payment rails that move money across banks, mobile money platforms and borders without friction, without high fees and without excluding people who do not have a traditional bank account. Layer 3 is data exchange. Secure, consented, interoperable systems that allow health records, tax records, land registries and business licenses to flow between institutions, eliminating the paper chase that still defines most African citizens' experience of government services. When all 3 layers are in place and interoperable, the economic effect is transformative. Research published in the LSE Africa blog in March 2026 confirmed that well-designed DPI could add 3 to 7% to GDP through better identity coverage alone, while enabling the digital single market that AFCFTA promises by 2030. Picture a smallholder farmer in rural Ethiopia. With a functioning DPI stack, she can verify her identity digitally, receive a government subsidy directly to her mobile money account, access her land title records to secure a loan, and register her produce for export, all from a feature phone. Without DPI, each of those interactions requires a different system, a different queue, and often a different city. DPI is not a technology upgrade. It is an economic emancipation tool. Key point 2. What Africa is already building. The good news is that Africa is not starting from zero. Several countries are already building significant DPI foundations, and the lessons are instructive. Rwanda has built one of the most integrated digital identity ecosystems on the continent, with a national digital ID linked to health insurance, financial services, and government benefits. It is not perfect, but it is interoperable and it is scaling. Kenya's MOSIP-based identity infrastructure is being adapted and deployed across multiple African countries, making Kenya a DPI exporter as much as a DPI builder. Kenya Safaricom, which surpassed 50 million customers in July 2025, is using AI as the foundation to make Kenya East Africa's primary ICT hub, a private sector DPI layer operating on top of a functional government identity foundation. Nigeria, Africa's largest economy, set a target in late 2025 to roll out its national DPI framework by the first quarter of 2026, anchored in the Nigeria Data Exchange platform being developed by NITDA. The framework will serve as the backbone of Nigeria's e-government system, enabling efficient service delivery and creating an enabling environment for innovation. South Africa launched the Mzansi Digital Identity Initiative in 2025, with the Department of Home Affairs publishing draft amended regulations for public comment as recently as May 2026. Confirming that this reform is gathering real pace. And at a continental level, the AFC-FTA ADAPT program, launched in partnership with the Tony Blair Institute, the IOTA Foundation, and the World Economic Forum, is building shared digital public infrastructure for trade, digital identity, documentation, payments, and data exchange that enables goods, services, and capital to move across African borders with the efficiency the 21st century demands. Key point 3, the hard truths Africa cannot ignore. Now let me name the challenges directly, because this is not a channel that deals in hype. Firstmost, DPI, thought leadership and implementation models are still being imported, not generated on the continent. Research ICT, Africa's 20-year Pan-African Policy Network, flagged this directly in their 2025 study. Since India's G20 presidency elevated DPI as a global agenda item, it has dominated multilateral discussions in Africa. But the framing, the technical standards, and the implementation models are still arriving from outside. Africa needs to shape the DPI agenda, not just receive it. Second, cross-border interoperability is lagging even within regional economic communities. Digital IDs issued in Ghana are currently not recognized in Nigeria. Payment rails that work within Kenya do not automatically extend to Uganda. The infrastructure exists in silos, and silos are the enemy of the single digital market that AU, Smart Africa, and AFC-FTA promises. Third, governance is the make or break factor. DPI only works if institutions trust it enough to replace manual processes. Without that trust, built through transparency, accountability, and genuine data protection, digital systems exist on paper, while borders still rely on stamps and physical checks. The ITU and the African Telecommunications Union convened a specific webinar in April 2026 focused on this exact challenge: how to advance DPI through standards, interoperability, and institutional collaboration. The conversation is happening. The implementation is the hard part. So, given all of that, what does getting DPI right in Africa actually look like? Here are 5 things that must happen. The strategic insight. Here is the strategic reframe I want every policymaker and regulator watching this to carry forward. DPI is not an IT project. It is not a procurement decision. It is not a Ministry of Digital Affairs initiative. It is a sovereign policy choice about what kind of digital economy Africa wants to build and Who controls the foundational infrastructure that everything else runs on? The Carnegie Endowment for International Peace, in its April 2026 analysis of Africa's digital infrastructure agenda, put it plainly. Africa's digital policy priorities are layered, dynamic and cumulative, with new technological layers building on existing connectivity foundations. Partners that engage across multiple layers of the digital ecosystem will be best positioned to support Africa's digital transformation and scale impact. That means DPI is not just a technology conversation, it is a geopolitical conversation. Who builds Africa's digital identity layer? Who runs the payment rails? Who governs the data exchange protocols? The answers to those questions will shape Africa's economic sovereignty for the next 50 years. And the decisions are being made right now. The practical takeaways. So what must African governments actually do? Here are 5 concrete actions that can move DPI from conversation to implementation. 1. Adopt open standards and open source tools. Tools like MOSIP for digital identity are African adaptable, country controlled and not dependent on any single vendor. Every African government building a national identity system should be building on open foundations, not proprietary platforms that create permanent lock-in. 2. Build for interoperability from day one. A digital ID that only works within one country's systems is not DPI. It is a digital silo. Every national DPI investment must be designed to interoperate with neighboring countries and with the AU Digital Transformation Strategy's continental frameworks from the first line of code. 3. Anchor DPI. Governance in law, not policy. Data protection legislation, digital identity acts and payment systems regulations must be in place before systems go live, not written after the fact. Governance is not a phase 2 activity. It is a foundational design requirement. 4. Ensure inclusion is a design principle, not an afterthought. DPI that works for smartphone users in capital cities but excludes rural communities, women and people without formal identification has failed at its core purpose. Offline functionality, local language interfaces and agent-based access models must be designed in from the start. 5. Fund African DPI research and thought leadership. The frameworks, standards and implementation models that Africa adopts should reflect African realities, not be imported wholesale from India or Estonia. Research ICT Africa's Pan-African DPI study, due for completion in 2026, is exactly the kind of evidence base that should inform continental policy. Fund it, use it, build on it. Conclusion. Digital public infrastructure is not the future of Africa's digital economy. It is the present, being built right now, in real time, with decisions that will be very difficult to reverse. The question is not whether Africa will have DPI. The question is whether Africa will own it. If this video sharpened your thinking on DPI, share it with one person in your network who is making these decisions. Don't forget to subscribe and turn on the notification. I will see you in the next video, which is showing on your screen now. Thank you for watching.